The primary reason why everyone is talking about Nvidia stock right now is because the company reported their quarterly performance update, and it's important for all stock market investors because of how important Nvidia is to the overall stock market because of its connections to the artificial intelligence trade. And so I thought it'd be very important for us to go through the details of what Nvidia reported so we can get an understanding of why Nvidia is so important to the stock market right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Nvidia said that the third quarter data center revenue came in at $51 billion, and that was an increase of 66% year over year. That was driven by compute, which increased 56%, driven primarily by its latest generation Grace Blackwell 300 unit RAM, and networking revenue more than doubled given the onset of its NVLink scale-up. So let me break this down. First of all, data centers, the artificial intelligence boom, is being driven by an increasing effectiveness of AI. And so companies like Amazon, Microsoft, Alphabet, and Meta platforms are spending collectively hundreds of billions of dollars in adding new data centers optimized for artificial intelligence and upgrading previously standing data centers with these new accelerated computing units. And so that's driving all of this investment, and investors are very concerned about this category in recent weeks. They're concerned that those large hyperscalers I just mentioned are spending too much on AI, that they're getting ahead of themselves, that they're spending before they're generating revenue. Now, artificial intelligence is incredibly popular with consumers, with OpenAI's ChatGPT boasting an estimated 800 million weekly active users and Google's Gemini boasting an estimated 650 million monthly active users. While those user numbers are large and growing rapidly, they're still not generating very much revenue from those users. They're still providing most of that computing, most of that large language model use for free without advertising to support those investments. Well, I guess you could say that Alphabet is utilizing advertising because it's also using its AI search results inside its traditional Google search engine with AI overviews. So, in a sense, Alphabet is monetizing more so than you could say ChatGPT, which is not incorporating or advertising in its large language model. And thankfully so, it provides a cleaner platform for users to experience and drives adoption more quickly. But eventually, these companies will need to monetize more aggressively because they're losing large sums of money on the bottom line. And it's unsustainable for these businesses to continue offering this product for free without monetizing. In the early stages, it's understandable as you generate increasing awareness and consumer adoption, but incrementally they will need to monetize. And when they start to monetize, it remains to be seen if consumers will continue using these large language models or will they stop using them because they start seeing advertisements or it's behind a paywall and consumers don't feel it's worth it to pay $10 a month or $20 a month or $5 a month, whatever they charge in order to use these large language models. That remains to be seen, and that is increasing risk for investors that are looking at these companies spending hundreds of billions of dollars without certainty on how they're going to monetize. And it's changing their business models from relatively reliable revenue and profit streams to now investing hundreds of billions of dollars in an area with large question marks. And so that's creating this sort of concern now in recent weeks from stock market investors. So these world hyperscalers, which are a trillion-dollar industry, are transforming search, recommendations, and content understanding from classical machine learning to generative AI. And this particular use case already makes it worthwhile, which is something that I don't think stock market investors fully understand. Stock market investors, as I mentioned before, are concerned about the monetization from large language models. But what stock market investors are failing to understand is that they don't need to monetize those large language models um, in order for these investments to make sense. For instance, Meta Platforms already justifies those investments in expanding its data center footprint because it improves their recommendation systems. It improves its ability to show you content that you're most likely to engage with, and therefore keeping you on the platform longer and making you engage on the platform more frequently and open the app more frequently. And all of that leads to more advertising served to you while you're on the platform. And oh, by the way, those investments in artificial intelligence help marketers target the right advertisement that will get you to engage with the advertisement, which in turn will increase the return on advertising spending, which in turn increases the spending from marketers. So just in that use case alone, Meta Platforms is getting its money's worth. In the most recently completed quarter, the company generated accelerating revenue growth at roughly 25%. That's a rate of increase that Meta Platforms has not delivered in quite some time. And so this is just one of the categories that businesses are already benefiting from the investments in artificial intelligence. And compared with traditional data centers that were based primarily on CPUs, these newer data centers that are based primarily on GPUs offer these large hyperscalers a lower total cost of ownership. So even if they're just using these new data centers that are optimized for AI, even if they're only using these for their legacy businesses like social media, like YouTube, like streaming content, like search, even if they're just using it for those traditional businesses, it increases the monetization capability of those businesses by making them more valuable to consumers. And then it also increases the return on advertising spending because it improves the targeting capability of marketers while simultaneously lowering the total cost of ownership for these large hyperscalers in those business models. So that's something that I think stock market investors should comprehend and consider along the lines with yes, it is more risky for these companies to now shift their business models more focused on these new developments with AI, which are still uncertain. There's still wide disparity on the potential outcomes here. It could be really, really good for these businesses. It can also be really, really bad. It's still very early days, and investors are not comfortable with that wide disparity of outcomes while also spending hundreds of billions of dollars increasing capital expenditures. So that's also understandable. Hey, if you value my process for researching stocks, I think you'll appreciate access to my spreadsheet containing my discounted cash flow valuations, which calculate a fair value for over 200 companies. It answers the question, what's a good price to pay for a certain stock? You can get access by joining our channel at the investor tier or above. See the link in the description or click the join button below to learn more.